Haven't filed your taxes in years? Most people think filing late will automatically trigger an IRS audit. But the truth is, filing before the IRS finds you is the single best protection you have. If you have unfiled tax returns and you're not sure what to do next, call Silver Tax Group at 855-900-1040 or visit us at silvertaxgroup.com for a confidential review. The longer you wait, the higher the risk. I'm Chad Silver, tax attorney and founder of Silver Tax Group. I've helped hundreds of clients catch up on years of unfiled returns, people who were certain they were heading for an audit, or worse. In most cases, filing late and filing accurately kept them out of trouble entirely. Today, I'm going to give you 5 rules for filing back taxes without triggering an audit. These aren't generic tax tips. These are the rules I apply to every client who walks through my door with a stack of unfiled returns. If you follow them, you dramatically reduce your exposure. If you ignore them, you're gambling with the IRS, and the IRS usually wins. Rule number 1, file before the IRS finds you. This is the most important rule, and it's the one people get wrong every single day. You are not safer hiding from the IRS. You are safer filing before they discover you. Here's why. The IRS has a voluntary compliance system. When you file late but voluntarily, meaning the IRS didn't have to track you down, the system treats you differently than someone who filed only after an audit notice arrived. Voluntary compliance is the single biggest factor that keeps a civil tax matter civil. I had a client, we'll call him Michael. Michael hadn't filed in 6 years. He was a consultant with fluctuating income, and no notices, no audits, but he was terrified that filing would wake the dragon. When he finally came to us, we filed all 6 years within 90 days. The IRS processed every return. He owed back taxes plus interest and penalties, but there was no audit, no criminal referral, no levy, just a tax debt he could resolve through an installment agreement. Here's the alternative. The IRS discovers you first through a W-2 mismatch, a 1099 that doesn't match a return, or a bank reporting requirement. Now you're not a voluntary filer. You're a target. The IRS opens an examination. They look at everything, and the penalties escalate. The bottom line, the IRS already has your income data. They know you haven't filed. Filing late and voluntarily closes the gap before they decide to close it for you. Rule number 2, accuracy is your shield. When you file back taxes, every number matters. One wrong entry, one omitted 1099, one misstated deduction, and you've given the IRS a reason to look closer. Here's what trips people up. They're in a rush to catch up, so they estimate. They round numbers. They forget a freelance client who sent them a 1099 3 years ago. They claim deductions they can't document. The IRS receives copies of every W-2, every 1099, and every information return filed under your Social Security number. When your return doesn't match what's in their system, it generates a discrepancy notice. Enough discrepancies, and that notice becomes an audit. The fix is simple but not easy. Reconstruct your income before you file. Request wage and income transcripts from the IRS. They'll show you every form the IRS has on file for you. Pull bank statements. Recreate your deductions with documentation. If you can't document a deduction, don't claim it. Losing a deduction is better than triggering an audit. I had a client, we'll call her Laura. Laura filed 3 years of back taxes on her own before coming to us. She'd estimated her business expenses. She was off by about $11,000 across 2 years. The IRS caught the discrepancy, opened an audit, and expanded it to include 2 additional years. What started as a 3-year catch-up became a 5-year examination, all because she estimated instead of reconstructed. The bottom line, when you're filing late, accuracy isn't optional. It's your only protection against a deeper investigation. Rule number 3, know what not to say on your return. This rule is about what you don't put on your tax return. Most people think more information is better. With the IRS, more information is often more risk. Here's what I mean. You don't need to explain why you filed late on your tax return. You don't need to attach a letter of apology. You don't need to flag anything. File a clean, accurate return. That's it. The moment you start explaining, you're giving the IRS information they can use against you. Same rule applies to amended returns. If you're correcting a previous year, file the amended return with the corrected numbers. Do not write a narrative about what happened. Do not volunteer that you forgot something. Do not use words like mistake or error or oversight. Those words become evidence. I've seen clients torpedo their own cases with a well-intentioned explanation. One client, we'll call him Richard, attached a letter to his late return explaining that he'd been overwhelmed and didn't realize he needed to file. The IRS revenue officer used that letter to argue that Richard's failure to file was willful, not just late, but intentional. That one letter turned a simple late filing penalty into a willful failure case. The bottom line, your tax return is a financial document, not a confessional. File the numbers. Say nothing else. Rule number 4, know when to use a tax attorney versus a CPA. If you've missed 1 year and your return is straightforward, a W-2, maybe some interest income, a CPA or an enrolled agent can handle it. If you've missed multiple years, if you have a business, or if there's any foreign reporting involved, you need a tax attorney. Here's why. CPA prepare returns. Tax attorneys protect you while the returns get prepared. The difference is attorney-client privilege. What you tell your CPA can be subpoenaed. What you tell your tax attorney is protected. This matters because when you're filing back taxes, you may need to discuss things that expose you to risk, unreported income, foreign accounts you didn't know you had to report, business deductions you can't fully document. You want those conversations protected by privilege, not discoverable by the IRS. There's also the strategy question. A CPA will prepare an accurate return. A tax attorney will prepare an accurate return and build a defense strategy around it. Which years to file first, which amnesty program to use, how to position your filings to minimize audit exposure and penalty exposure simultaneously. If your situation is simple, a CPA works. If there's any complexity or any risk, the protection of attorney-client privilege is worth the cost. The bottom line, the right professional can mean the difference between catching up cleanly and triggering an examination. Choose based on your exposure, not just your budget. Rule number 5, use the right amnesty program. If you have unfiled returns involving foreign accounts, foreign income, or international reporting requirements, the standard catch-up approach doesn't apply. You need a specific amnesty program, and picking the wrong one can be catastrophic. The IRS offers the streamlined filing compliance procedures for taxpayers who can certify that their failure to file was non-willful. No penalties. Just file 3 years of returns and 6 years of FBARs, pay any tax due, and you're current. If the IRS already has you on their radar, or if your failure was willful, the voluntary disclosure program may be your only path. You'll pay more, but you'll avoid criminal prosecution. The trap. People file under streamlined when they don't qualify. They certify non-willfulness when the IRS already has evidence of willfulness. That false certification becomes a separate prosecutable offense, essentially, lying to the IRS to get into an amnesty program. I covered this in detail in my FBAR compliance video, which I'll link in the description. But the rule is simple. If foreign accounts or foreign income are involved, don't file standard back returns. Get a professional to evaluate which program you qualify for before you submit anything. The bottom line, amnesty programs have specific eligibility requirements. Certifying falsely is worse than not filing at all. The 5 rules again. File before the IRS finds you. Reconstruct your income. Don't estimate. Say nothing beyond the numbers. Choose your professional based on your exposure. And if foreign accounts are involved, use the right amnesty program. At Silver Tax Group, we don't just prepare your back returns. We build your compliance strategy. We implement it, and we'll defend it if the IRS questions anything. If you have unfiled tax returns and you're ready to catch up the right way, call us at 855-900-1040 or visit silvertaxgroup.com for a confidential review. Don't wait until the IRS comes knocking at your door. I'm tax attorney Chad Silver. If you found this helpful, click like below. Subscribe for more IRS defense and tax resolution content. Thanks for watching.